Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today, we're going to talk about one of the hottest topics in the crypto market right now. The price of Bitcoin has once again tested the critical level of $110,000, but still hasn't managed to break through this key resistance with strong conviction. On Thursday, July 3rd, the world's leading cryptocurrency rose approximately 1.9%, briefly touching $110,000, before slightly retreating and closing above $109,700. This movement reflects the typical volatility of the market, especially during moments of technical decision-making like this one. According to Guilherme Prado, country manager of Bitget in Brazil, trading volume was weak the day before, indicating that investors are maintaining a cautious stance and closely watching the next steps of the price action. Meanwhile, sell-offs from long-term holders continue to be active, showing that not everyone is optimistic about the continuation of the uptrend. Among altcoins, the standout was Dogecoin, which surged 7.8%, leading the gains in the top 10 of the crypto market. After all, surpassing this level could mean that buying pressure is prevailing over selling, something that could open the door to new historical highs. The attempt to break above $109,000 is viewed by many analysts as an important technical signal. Despite this positive wave, the market recorded significant liquidations totaling $332 million, with $280 million coming from short positions. The first is extremely optimistic and projects that Bitcoin may reach $140,000 still this year, solidifying its historical high in 2025. Something that had already occurred previously during intense geopolitical events such as the so-called 12-day war between Israel and Iran. However, until BTC consolidates firmly above this mark, the risk of a new correction remains very real. Meanwhile, Ethereum also showed strength, rising nearly 6% and reclaiming the important barrier of $2,500, reinforcing the idea that liquidity is flowing into the sector. Bitcoin led the losses in this move, with $109 million in liquidations, followed closely by Ethereum at $103 million. This indicates that many traders were betting on a stronger drop in BTC, but were caught off guard by the temporary recovery. Using his account on X, Brant posted an inverted chart, giving the impression that BTC was about to enter a correction. In a sarcastic tone, the trader suggested that Bitcoin's next target would be exactly $140,000. After breaking key technical resistances, faced with this scenario, two main views stand out among crypto traders and analysts. The second view is more conservative, forecasting a potential deeper correction and a return of the price to the $90,000 range. Investors are watching closely for any signs that the Federal Reserve might anticipate interest rate cuts, which tends to benefit risk assets, including cryptocurrencies. This division of opinions illustrates the uncertainty currently reigning in the market, especially within a complex global macroeconomic context marked by persistent inflation, expectations of interest rate cuts in the United States, and large capital flows seeking alternative forms of wealth preservation. One of the most respected names in the crypto universe, Peter Brant, recently shared an enigmatic analysis of the Bitcoin chart for the BTC-USD pair. However, he played with visual interpretation, as the highest values were positioned below the vertical y-axis of the chart. Hayes recently expressed concerns about potential dollar liquidity pressures in the market caused by the replenishment of the Treasury General Account, which could negatively impact Bitcoin's price. This projection aligns with an interesting theory. Bitcoin has been closely following the trajectory of global monetary supply measured by M2, which recently hit a new historical record by surpassing $55.48 trillion. Since early 2024, BTC has followed this expansionary curve of global money supply, and the current breakout could mark the beginning of a new phase of appreciation driven by macroeconomic factors. In addition, the fund signaled it may further reduce its exposure to Bitcoin if market conditions worsen in the coming weeks. At the time of publication, the price of Bitcoin was trading at $109,700, with daily trading volume rising 20% to reach $56 billion, a sign that market activity remains heated. Additionally, data from the CoinList platform revealed a rise of 7.28% in BTC futures interest rates, indicating a slightly bullish sentiment among institutional and professional traders. Another key factor that could influence the behavior of the price in the coming weeks is the release of U.S. inflation data for June. According to the FedWatch tool, 25% of analysts now expect an interest rate cut at the July 30th meeting, compared to just 12% the previous week, which demonstrates a noticeable shift in monetary policy expectations. On the other hand, there are no shortage of voices warning about a potentially more aggressive correction. One of them belongs to Arthur Hayes, co-founder of BitMEX and CIO of the cryptocurrency investment fund Maelstrom. According to him, this could push BTC toward levels between $90,000 and $95,000. Head of the annual Jackson Hole Symposium in August, an event traditionally important for setting global monetary policy guidelines. As a precautionary measure, the Maelstrom Fund decided to liquidate all its positions in altcoins that lack sufficient liquidity. With this, Hayes reinforces the need for caution among investors. Even amid optimistic projections such as those from Standard Chartered or Peter Brandt,